Hello, Assalamualaikum. So my name is Muhammad Razi bin Osman. For the methodology part, this study adopt a mixed method approach combining both quantitative and qualitative analysis to assess the risks associated with the Bank Islam Malaysia Berhad, or we call BIMB. The methodology focus on evaluate the various type of financial and non-financial risks, including the credit risk, market risk, liquidity risk, operational risk, and also Sharia non-compliant risk. And then based on the data for this study was primarily collected from the Bank Islam Annual Financial Report 2023, which provide detailed financial statement and risk disclosure in compliance with the Basel III regulatory standards. Additionally, insight particularly regarding your market risk and stock performance, we are obtain Yahoo Finance for find the share price for BIMB, and the relevant articles and publication access via Google will review to support the qualitative analysis and provide context for the risk environment. And then the qualitative analysis involve calculating and interpreting key risk ratio relate to the five risk category, and those ratio were derived directly from the financial data provided in the 2023 annual report. And then the qualitative analysis, the team evaluate narrative disclosure and explanation provided in the report and supporting article to understand how risks are managed and reported. So this dual approach ensure a comprehensive evaluation of both measurable and strategic aspects of risk within the bank Islam.
Okay, next is coverage ratio. To assess how much provision cover the non-performing financing. It's indicate the strength of buffer against any credit loss. Risk-weighted asset ratio to measure the total risk exposure of asset, credit, market or operational risk. It used to determine the minimum capital that bank must hold. Next is the net charge-off ratio. It shows the percentage of loans deemed uncollectible after recovery, indicates the loan portfolio quality and the credit risk management by the bank. Type of credit risk, there are five types. Default risk, failure of borrower to meet the scheduled payments, means they're defaulting. Counterparty risk, risk that a counterparty in a financial transaction defaults. Concentration risk, excessive exposure to a single borrower or sector or a geography. Residual risk, meaning after credit risk mitigation technique. Next is migration risk, risk of the credit rating downgrade affecting the asset current value. next is the summary credit risk ratio for Bank Islam for 2023. So we have here the non-performing financing NPF ratio is 1.75%, financing loss provision ratio 2.23%, coverage ratio 127.3%, capital adequacy ratio 13.26%, net charge off ratio 0.55%. Okay, credit risk in BNB context for 2023. The governance framework managed by MRCC BRC Group Credit Management and Risk Management Division. The policy and guidelines, financing standard, credit risk rating, collateral valuation, problem financing handling. Their risk appetite is aligned with the regulatory requirement and their business strategy. Some risk mitigation tool is regular stress testing to assess the resilience under adverse condition. Their main objective to build high quality credit portfolio, optimize risk return balance, identify and mitigate the potential credit problems, and ensure the regulatory compliance, and also safeguard their financial health.
Market risk is a chance the bank might lose money due to change in things like a profit rate, or we call Islamic alternatives to interest, foreign currency value, and then sukuk price or even commodity price. This change can affect how much the bank can earn on how much its assets are worthy. And then for the calculation, BNB calculate that on a typical day there is a 1% chance it could lose up to 1.864 million from its 200 million investment portfolio. This kind of estimate helps the bank prepare for rogue day and ensure it has enough capital to stay safe. So for BNB, follow Islamic principle and avoid interest-based transaction. It still faces risk like an other bank, just in slightly different form. So to manage this, it use a mix of moderate tools like earning at risk and also equity capital at risk, along with regular daily monitoring, stress testing, and ethical hedging tools like Islamic profit rate swap. So for the important financial indicator, which is interest rate sensitivity gap, interest net interest margin, and also price to earning ratio. So after we compute and summarize based on the individual assignment, the final answer will be like for interest rate sensitivity gap of 7.8 billion means BNB is more exposed to falling rates, and also net interest margin uh, was 477.57 million. This tells us how well the bank is earning from its financing activities compared to what is paid depositor. And also for the price to earning ratio, which is 10.05%, this shows us how much the investors are willing to pay for each ringgit Bank Islam earning. It helps understand on how the market value of the bank. Okay, so next, which is market risk in Bank Islam context, which is Bank Islam face its own unique set of market risk, which is unlike conventional bank, and that deal with interest rate. Bank Islam deals with profit rates based on Sharia compliant version, and when the rate shift on or when the market move unexpectedly can impact the bank's income, investment, and also customer confidence. So there is a several point that focus on the market risk for Bank Islam, which is fixed versus the floating profit rate mismatches. And then we have volatility in sukuk value or Islamic bonds. And then thirdly, we have exposure to Malaysian economic condition. So fixed versus floating profit rate mismatch. One of the main market risks for banks now come from mismatch between the type of profit rates applied to the asset and liabilities. So let's say Bank Islam lends money through the contract that offer fixed return, but many deposit require floating return. If market profit rate go up, BNB has to pay more to depositor while still earning the same or the fixed income from the financing. So this squeeze the profit margins. Instead of the bank Islam, assets are floating and liabilities are fixed. Then falling profit rates can also hurt which the income drop or falls, but expense stay the same. Um, and they affect both short-term earning and also the long-term value of the bank capital. So the challenges is the bank Islam must really on Islamic profit rate swap and careful balance sheet planning, and also Malaysia in a country like Malaysia, when the BNM adjusts based on inflation and also the economic condition, this risk must actively monitor. So for volatility in Sukuk value, which is Islamic bonds, which another big market risk for Bank Islam is the changing value of Sukuk, which are major part of the bank investment. Just like traditional bonds, Sukuk value drop when the profit rate rise. So when the market shift unexpectedly, Bank Islam might see its investment portfolio lose the value. So based on the Islamic capital market, it's not as liquid as a conventional bond market. This means it's hard for Bank Islam to buy and sell quickly when the price changing. Sukuk price can also be influenced by credit risk, geopolitical tension, and also whether issuers stay on the Sharia compliant. So this kind of volatility can lead to unrealized loss that which do not immediately show on the income statement but still reduce the bank capital stretch to stay sorry. And then exposure to Malaysian economic condition. So Malaysia broader economy also affect Bank Islam significantly. Instead of the inflation, monetary policy by Bank Negara Malaysia and also performance of the Ringgit Malaysia. Uh, so it will rise the inflation increase cost for both the bank and its customer. And then BNM rise the overnight policy rate to fight the inflation. So Bank Negara Malaysia cost of fund will be rise. And the weak of ringgit makes import costlier, add inflation pressure, and can hurt the value of Bank Islam foreign currency investment. To stay ahead, Bank Islam needs to keep a close eye on the economy, adjust and then adjust the strategy when they need, and hold enough capital, also the liquid asset. So, impact of market risk for BIMB, one of the most immediate effect is profitability or volatility, as fluctuation in market profit rates can disrupt net income, particularly when the liability reprice faster than asset and the compressing margin. Additionally, shift in market conditions such as rising rates or declining investor sentiment can lead to decline in the valuation of asset, especially in Sukuk and other fixed rate instrument of investment, resulting unrealized loss and reduced capital buffer. So liquid strain may also emerge. Sorry, may also emerge during period of market strategy or macroeconomic uncertainty. So lastly, Bank Islam must sustain sufficient capital under Bank Negara Malaysia, risks based on capital framework to absorb shock and remain compliant. So finally, recommendation on how to manage the market risk. Bank Islam should to manage the market risk through a comprehensive and Sharia compliant risk management approach aligned with both Basel III standard and also based on the Bank Negara Malaysia guideline. And then secondly, Bank Islam also implements reverse risk management framework under the Basel III, which emphasize capital adequacy, and then risk coverage, also the liquidity requirement. Thirdly, BNB conduct stress testing and use the value at risk model to measure predict potential loss under extreme market condition. And lastly, asset liability plays a crucial role in Bank Islam's risk strategy, particularly through the duration gap analysis by monitoring the difference in duration of asset and liabilities.
Assalamualaikum and hello everyone. Today I'll be presenting on the topic of liquidity risk analysis for Bank Islam Malaysia Berhad based on its financial data for the year 2023. Liquidity risk definition. Liquidity risk refer to the potential inability of a bank to meet its short-term financial obligation due to a lack of liquidity asset. In the banking sector, this is a serious issue. If not properly managed, it can lead to reputational damage, regulatory penalties, or even the collapse of the bank. That's why assessing liquidity is crucial for financial stability. Okay, next we move to Bank Islam Malaysia Berhad Liquidity Risk Overview. Bank Islam Malaysia Berhad as a full-fledged Islamic bank face unique liquidity challenges. It operation based on Sharia compliant deposit and financing product. While the bank has a strong liquidity position, it must manage potential liquidity gaps caused by deposit withdrawal, financing disbursement, and market condition. This is especially important due to its reliance on deposit and long-term financing structure. Now we move to regulatory indicator, liquidity coverage ratio and net stable funding ratio. Bank Islam Malaysia Berhad uses regulatory indicator to monitor its liquidity, primarily the liquidity coverage ratio and the net stable funding ratio. In 2023, Bank Islam Malaysia Berhad reported an liquidity coverage ratio above the 100% regulatory requirement, which show the bank's ability to handle short-term liquidity stress. Likewise, the net stable funding ratio was also strong, indicating a stable long-term funding structure. Now, internal liquidity ratio for 2023. Internally, Bank Islam Malaysia also track ratio like financing to deposit ratio at 91.67%, meaning financing is well supported by deposit. Liquidity gap ratio at 80%, showing a majority of short-term liabilities are backed by liquidity assets. And cash ratio at 8.33%, indicating the bank hold a reasonable amount of immediate cash and equal balance. For the impact of liquidity risk, if Bank Islam Malaysia Berhad fail to maintain adequate liquidity, it may not be able to fulfill sudden withdrawal demand from customer. This could lead to loss of customer trust and damage the bank's reputation. Additionally, the bank may have to borrow fund at higher cost, affecting profitability. Worse, if it falls below the required equity coverage ratio or net stable funding ratio, Bank Negara Malaysia may impose penalties. Unresolved, this can threaten the bank's operation. And for the recommendation, to mitigate this risk, Bank Islam Malaysia Berhad should maintain a sufficient buffer of high quality liquid asset like government sukuk. Second, diversify its funding sources beyond just deposit and align the maturity of its asset and liabilities. Conduct regular stress testing and prepare contingency plans and invest in real-time liquidity monitoring tools to manage any fluctuation quickly and effectively. In conclusion, Bank Islam Malaysia Berhad is performing well in terms of liquidity management but must continue proactive strategy to remain resilient. Proper management of liquidity risk ensure that banks stability and maintains customer trust in the long term run.
Assalamualaikum warahmatullahi wabarakatuh. My name is Siti Syafika binti Abdullah. Let me briefly explain the operational risk at Bank Islam Malaysia Berhad or BIMB. Operational risk refer to loss caused by failed system, human errors, internal weakness, or external threat, such as cyber attack or service disruption. For BIMB, these risks are critical, especially given its role in Islamic finance, where maintaining trust and compliance is essential. To manage this, BIMB follows Bank Negara Malaysia guidelines and Basel III standards. It uses the basic indicator approach or BIA to calculate its operational risk capital based on the average gross income over 3 years. In 2023, BIMB allocate RN 183.1 million ringgit Malaysia as its operational risk capital charge. This shows strong financial health and the ability to absorb unexpected loss. Importantly, there were no major business disruption last year. This was due to proactive steps like regular system update and change, cyber security, staff training, and effective business continuity planning. Their digital platform, Go by Bank Islam, runs smoothly, further showing resilience. BIMB also used the 3 lines of defense model. The first line manage day-to-day risk. The second line oversees and monitors. The third line internal audit and ensure compliance. In summary, BIMB's operational risk is well controlled with strong governance and capital support. This build customer confidence and ensure seamless banking operational. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Wano Atira binti Wan Ahmad Sabri. So today I will verify explain the Syariah non-compliant risk or SNC risk at Bank Islam Malaysia Berhad. SNC risk involve financial or reputational loss when the bank's operation do not comply with Syariah principles. As a full-fledged Islamic bank, managing the risk is critical to preserve trust and integrity. So BIMB has strong controls in place, including a Sharia Supervisor Council, in-house audit and reviews, and real-time monitoring. In 2023, BIMB identified 41864.07 in SNC income. Impressively, over 95% of this was verified through charitable donation. No major SNC incidents were reported. This showed that their staff training, product screening, and audit procedure are effective. Sharia risk register and active oversight further support yearly detection and correction. In conclusion, BIMB's strong Sharia governance enhances both compliance and customer confidence, especially among its Muslim clients. So that's all from me. Thank you.